saying all of the things that they could do, that told me they have no plan.
When you start adding together all the stuff that he listed out, and I think this is the big news, that I think they were projecting somewhere in excess of $20 billion to buy out that last third of Hulu.
You have the Hulu put coming up next year. What are your thoughts on your ability to fund that transaction?
Hey!
Thank you.
Question of the day.
Our streaming business is still actually very young. In fact, it's not even 4 years old.
He's repeating himself already.
In November of 2019. And we love to have the margins that Netflix has. They've accomplished those margins, though,
I will kill that later.
Over a longer period of time.
I'll remind everyone that the floor for that put is about $9.2 billion.
Yes!
We're very comfortable with our current liquidity position. We've got about $11.5 billion of cash on our balance sheet.
That was known.
Got about $10.5 billion worth of revolving credit facilities and commercial paper.
I need that too.
Told you.
So we're going to have plenty of future cash flow to help fund all of this asset.
Yep.
That means 1 plus 1 equals they need a little more.
I would also like to note that from a balance sheet perspective, we've got a strong single-A credit rating that reflects the strength that we see in our balance sheet.
I told you, corporate bonds.
We made significant progress recently.
Yeah.
Means they need credit.
Deleveraging coming out of the pandemic.
They will
we're
issue
prioritizing key free cash flow as a company. And we're being really disciplined and smart about how we go about allocating capital across the company.
Based on that last statement, Hulu probably will cost them more than $20 billion.
Yes.
Bob, on the ESPN side.
It looks like their free cash flow and cash on hand is increasing nicely, page 12. $12 billion, if I'm reading it correctly. Is this enough to buy Hulu now? Well, remember, they're not just going to take a pile of cash that they have, take all their cash and go, here, Comcast. That's not how that ever works. This is going to be floated with debt, with corporate bonds. This is maybe floated with additional. Basically, they're going to dilute their shares, or is one possibility. I'm not saying they will. They could. I think they did that with Fox. They issued a few $100,000 of new shares when acquiring that $70 billion asset. So they could do the same thing here with Hulu if they so choose. But I think most of it will be through lines of credit, through corporate debt. And as Iger and the CFO guided towards, and I mentioned this before, is, well, now you're going to have all of the income from Hulu. That additional income that comes in from that can be used over time to liquidate that purchase. They're not necessarily going to pay for everything right up front. It's probably going to be paid for over time.
I would take a moment to appreciate the fact that this is all because of Iger's acquisition of Fox. That is why this is happening. If Iger hadn't acquired Fox, they would not be in a position where they now are going to have to pay Comcast $10 to $20 billion. The irony with that is that probably Comcast and Universal are going to earn more on Iger having acquired Fox than Disney ever will on Iger having acquired Fox.
That's a very good point. I'd also like to add current assets minus current liabilities right now is $2 billion. So that might be cash on hand, but a lot of that cash is spoken for still at the moment. So they've got a long way to go. It's a lot better than the last quarter when it was 200 million with an M that they had.
The CFO, when he answered the question about the Hulu put, he listed off a wide variety of revenue sources by which they can purchase that.
Yeah.
He would not have done so unless they're going to have to throw everything in the kitchen sink at it. That also was the same point where he mentioned that the minimum, I believe, was $9 billion. But then he went on to talk about all of these various sources of income. When you start adding together all the stuff that he listed out, and I think this is the big news that journalists out there, if you'd like to actually do some journalism, I think this is a key thing to follow here. Based on what he was saying, and we said this live as it was happening, I think they were projecting somewhere in excess of $20 billion to buy out that last third of Hulu, because otherwise you don't have to list all of those. And that would confirm then what we've been hearing, what we've been saying about just how expensive Hulu is going to be. To put this in perspective, you're talking about purchasing a third of a streaming service that has, 40 million subscribers approximately? Maybe 50?
I think a little bit more than that. Yeah.
I think it's 50.
But it's very lucrative. Okay. That's the thing.
So, right. Yeah. But let's say this. You're going to spend for a third of it approximately what you spent on Fox And Andre is right in talking about what a horrible thing Fox was. Now you're in the same situation, and it's not like they can get out of it. You know, if they could get out of it, maybe we'd talk about, is this a good decision or not? They can't get out of it. They have to buy it.
And this is where I just threw in desperation, because it's one thing that I noticed, because he just started rambling and throwing in the kitchen sink, saying all of the things that they could do. That told me they have no plan. They know that these are our options, but they don't know exactly how much it's going to be. They don't know exactly how they're going to raise this, because if they had done that, he would have, I think that then he would have shown a strong face saying, oh, that's no problem at all. We are going to do this, that's sorted next. And that would have solved everything.
Yeah,
what he did right there was like, this, that kitchen sink.
Right.
That was desperation.
Yeah. You're absolutely correct. And they did mention leverage several times, pointing towards loans. Right now, that $23 billion valuation that Comcast has thrown out through back channels, that represents 14% of the total value of the Walt Disney Company. And unless they get the stock price up, which it looks like that's not moving anywhere based on what they've indicated in this earnings call. If they can raise that price if they can raise the stock price before that, and they don't have to hand over stock to their biggest competitor, the greater that value and the lower the price of the stock, the more stock they will have, the greater the percentage of their company's value they will have to hand over. So they really need that stock price to go up before that.
That's just it. And Jonas, I think you and I had that discussion some months ago when all this first came down the pike with Hulu. And to clarify on the point of where they got the $9.2 billion from versus, as Pro said, later in the call, they seem to guide towards, well, wait, why are they mentioning all this? They're expecting 20 or more. Both are true. As to remind folks out there, again, we still got 6,000 people watching there, maybe a lot of people that don't know this. So when this deal happened, when Disney acquired Fox, they also acquired their share of Hulu. Same time, they acquired the distribution rights to Avatar, too, which we'll talk about that one as well. We heard what you said, Iger. But on the case of Hulu, there was a put-call situation to where Comcast would effectively have the right to put it on Disney. Disney would have the call. That means Disney would have to buy it, and Universal could force the sale. Some idea of whether or not there could be a right of first refusal kind of thing. I can let Andrews talk on that. But the issue was, at that time, there was a minimum valuation set on Hulu of just over $27 billion. So for Hulu's portion, that's where the 9.2 floor, I think was the actual word they used in the earnings call, was a floor. A $9.2 billion floor based on the contractual minimum purchase total value of Hulu at 27 point whatever it was. Now, what happened was some months ago, Comcast made some statement. I don't remember if it was in an article somewhere or somebody had leaked it to somebody. It was published out there. But Universal Comcast had guided towards, we want 27 billion for the share, not the total value of Hulu, and then Disney pays a third of that. They were valuing Hulu to the tune of 70 billion. They were valuing Hulu with a net present value like the same size as Fox, as Pro just stated.
Right, and
that's where that came from.
The market right now, the billions that these companies are throwing at solvent streaming services, which there are not a lot of solvent streaming services out there. That is a big get to have a fully solvent, fully owned. They already fully control it because of the way that they've frankly screwed over Comcast in all of this, NBCUniversal, before Comcast purchased NBCUniversal. But Hulu right now is a nice little gem, and if they can grow that, they are sending good money after good, not good money after bad like they are with Disney Plus.
Right.
I think
kind of it.
I think that you are not going to hear this anywhere else, and I think this is the reason to be on this stream listening, so you know what's happening in entertainment. Nobody else, I think, is going to come out tomorrow unless they get the notice from us and decide they're going to carry the story. That inside this earnings call, if you know what they're talking about, you start adding up the numbers and you figure out, oh, wait a minute. Disney is confirming they're about to spend the money equivalent to something like 10 to 14% of their total corporate value to purchase a third of a streaming service that they already control in every other way. That, I mean, whatever you might think of it, that's a heck of a story. And that was not explicitly said in this meeting, but implicitly said only if you follow this at a very high level.
Right. And that's why I think that just like in 2017 through 2019 when they did the Fox thing, you will see some type of issuance of fresh shares from Treasury, or they will create new shares. And of course, because they can make the argument, well, look, we're going to be borrowing money. We're going to create $20 billion of new immediate value and assets to the Walt Disney Company. Let's dilute the shares. Let's just issue some shares to help cover this. We can sell these. And look, part of the reason the Walt Disney Company right now is kind of hovering where it is at 85, 86, there's pressure to push that price down, in my opinion. There's also a lot of pressure trying to push it up because there's a lot of value investors out there that look at it and go, look, it's still Disney. It's still a Dow Jones Industrial 30 component or a Dow Jones component. It's been around 100 years. It's probably not going anywhere. Yes, it's in a rough patch, and it's a lot lower than it probably will be 5 years from now. Again, this is the speculative thought process of an investor, be they institutional or individual. So there's a lot of people that still pick up Disney. There's a lot of people still pick up Disney, and there's probably going to be a lot of people that start picking it up tomorrow, thinking that, okay, well, maybe it's going to go up in a year because Disney Plus is going to get better. Parks are going to get better. These margins are going to improve. They're going to have new income from Hulu. That is not a recommendation that you go buy or sell or do anything with Disney stock. I'm not saying that. I am giving you just the hypothetical here of how some people behave and why Disney stock has just been stuck. Kiss my grits. Good to see you, buddy, for $10. This is an interesting one, Pro. Maybe you want to address this a little bit. Once Comcast receives the Hulu check, I bet they will make an announcement about further upgrades to their domestic parks, i.e., quote, thanks, Disney, for helping us to pay us to steal your market share.
Yes, we'll build a castle down here. It's Peach's Castle. But no, I think this, what a thing that this, honestly, the Hulu purchase could fund the development of the Zelda expansion at Islands of Adventure. It is an amazing thing.
We just made Epic Universe twice as big.
That's right. And don't forget, folks, again, I think this is something that out of the earnings call that you're not going to see enough of in the mainstream tomorrow when they cover this, that they don't have the insight to do it. I'm not trying to be derogatory. It's just, they don't cover this in this kind of resolution or in a way that reveals this kind of truth. But Disney is, in buying this third of Hulu, they're about to spend 10 to 14% of their total corporate value trying to buy a third of Hulu. Yep. And they already have all the control of Hulu. So the only thing that changes here is the full revenue off of that service. And I guess the fact that they can maybe put it into Disney Plus and eventually kill it.
I think that's what they're looking at is the economies of function and the economies of scale to where the Hulu platform and the Disney Plus platform from a technological and structural perspective can be coalesced to where you have a singular sign-in, everything's unified. You want the kids side, takes you to Disney Plus, the regular side, Hulu and Disney Plus. However they plan on structuring it, I think that's always been the game plan since get-go, because there's no reason to have two massive structural server systems backups that have to operate these two separate streaming. So that's going to save billions of dollars alone right there, I think, over the first few years. And then, of course, Disney has more carte blanche with what they can do content-wise, advertising, sales, everything else. There's a lot. Again, I'm spitballing right now, but I think that's what I see.